share my screen here for a little PowerPoint to talk a little bit about our main investment portfolio and then the new one, the new environmental, social, and corporate governance portfolio.
And Kevin, maybe while you're pulling up the slides, you could give a little context about why we actually are introducing this. There are some new advisory board members and new program managers that it may be helpful just to give a little context of where we are today versus where we've come from and where we're going.
Sure. So historically, we've had two pools, a long-term investment pool, and we have a short-term investment pool. The short-term pool is for basically a money market situation where any of these funds that we expect to be spent out in the next 3 years or so are stored. And then the long-term pool, which is much more diversified and is the focus of our investment committee, our investment policy statement. But one of the affiliates asked us quite some time ago to consider back then it was called socially responsible investing pool that we could maybe put together for an alternative to the regular long-term pool. And we looked at that, and some of the growth in that particular area was important. It tries to look at societal values and implement those across an investing platform. It looks to try to work in the environmental space as well. And then also in corporate governance, transparency, corporate boards and so on, and their powers and shareholder rights as well. So all of those things are incorporated traditionally in what they call the ESG portfolios today. And we're proud to announce the fact that we will start to offer one of those for our fund holders very soon in June 1st. And we'll go through sort of the background of what we have today and then go into what this offering is all about. And then hopefully we have a little time for some questions at that point. So can everyone see the screen that I'm sharing at this point? All right. So real quick, we're going to give an overview of our traditional long-term pool. We'll talk about the new one, and then we'll talk about some specifics around the launch of the new pool, the ESG pool for short, because no one likes to say environmental, social, and corporate governance all at once phrase. So why do we have an investment structure at all? Well, we believe that we're trying to create the power of endowments. Certainly the affiliates are very familiar with endowments. That's what you're building. And we also have about 60% of our assets are endowed. So it's a very big portion of what ACF does overall. And we're trying to build those endowments to create that lasting change and lasting impact that we can have together. It's conservative and it's diversified through a traditional platform of trying to minimize risk in a structure that also creates, I'll call it predictability and less of a risk profile that would normally be there if you didn't have diversification. And that's all contained in something called our investment policy statement. That's a public document. It's on our website. And you can peruse it if you wish. Some of these things that I'm pulling on this slide and others are actually right from that. That investment policy statement emphasizes being here in perpetuity, doing something over a long-term horizon as opposed to short-term gains and ones that are driven by day-to-day decisions. We look at 10 years or more at a time frame in terms of our investment policies and our investment structures. Chasing the tail of the dragon every day in the markets is not advisable necessarily, and it's certainly not winnable for the most part. And we can do that through diversification and avoid that excessive risk that might come with it if you were chasing the tail. Our traditional long-term pool is really made up of 4 big chunks. Global equities, which are stocks across an international basis. That's about 53.5% of our portfolio. That's the target. We do have a slight tilt towards US stocks right now, but that's still in that overall global category of 53.5%. About 25% of that portfolio is made up of fixed income or debt securities, bonds, as they're more commonly known, or treasury and inflation-proof securities, which is TIPS, and various other smaller classifications of debt instruments. We also have real assets. Those are both public and private investments in things you can touch, things you can grab a hold of, real estate, natural resources, commodities, infrastructure, things like that, things you can actually reach out and touch. Diversifying strategies are also classified as hedge funds sometimes, but really the primary driver of a diversifying strategy is to move out of sync with the markets, to do something different than the markets. And those definitions that you see here in that slide are actually directly from our investment policy statement. I recognize that some of these words and some of these terms are perhaps above people's heads. I also recognize that there's some folks out there that this would be beneath them. And I'm trying to find that happy medium in between, but that is what our traditional pool is made up of. We do also allow a 2.5% target of cash. That's so that we can invest in these private investments like private equity and private debt and not have to sell investments to be able to match capital calls and things like that. So what's the long-term pool all about? Its focus is long-term growth over time with a diversified risk profile. That's the main strategy of that traditional pool. So how does the new pool look, and what is it? It's a little bit different. It has a different set of standards. First, let's talk about a general set of standards that an ESG portfolio has. It's a set of standards for a company's operations that socially conscious investors use to screen out potential investments, either positively or negatively. And they use basically three criteria sets to do that. An environmental one, how does a company or an investment perform as a steward of nature? Social criteria, how do they manage relationships with employees, suppliers, customers, and the communities in which they operate? How about corporate governance, companies' leadership, executive pay? Do they go through audits? Are there internal controls? Are there shareholder rights? And are they performing in a manner which is discriminatory or something like that? Those kinds of criteria are what an ESG portfolio in general is all about. This new pool that we formed is an investment structure that we'll get into in a little bit, but it has two different kinds of screens, positive screens and negative screens. The positive screens look to take a look at the company's responsiveness to those factors that we mentioned, the environmental, the social, and the governance factors, and whether or not they are positively rated in those regards or negatively rated. The more positive relationships they have to those three criteria, then the better they are in terms of being allowed into that portfolio. It also rejects investments in certain classes of things. In this particular case, our ESG portfolio will reject investments in entities that operate in civilian firearms, controversial weapons, oil sands, thermal coal, and tobacco. That ESG pool is slightly different. It's made up of a 60-40 split between stocks and bonds. You might remember that the earlier portfolio, the long-term pool, had 53.5% in stocks, 25% in bonds, and a mixture of other investments. This one is strictly stocks and bonds. It doesn't have that other diversification metric, but it does have that diversity. It's global stocks again and global fixed income. They're going to take debt instruments from outside the US as well. Its focus is to build a diversified, sustainable portfolio that has those positive and negative ESG lenses that we're going to take a look at. So what is it exactly? So there's some handouts that were part of the materials that were distributed for the meeting here today. I'm going to summarize them a little bit here right on this slide. So that ESG pool, if you look at the 3-page handout, there's quite a bit of detail with respect to that ESG pool. but it's summarized right here. So it has a ticker symbol, just like every stock does on the US market. Its ticker symbol is EAOR, or EOR as I like to call it. That way I can remember it. But that EOR is made up of other indices, and those are listed here, 1, 2, 3, 4, 5 of them. And they consist of a variety of holdings within each of those structures. If you look on that page 2, you will see a list of those and the percentages that are held relative to each of those particular indices and the number of holdings that each one of those has. So for instance, the ESGU, which is the first one, the large mid-cap US, it has 34.64% of the portfolio, and it has 330 underlying stocks in that particular indice. ESGD has 14.41% and 456 in its little package. So I won't go through all of them, but it's there on that second page. You can take a look at it. Overall, there are over 6,000 investment holdings in those stocks and bonds. That's a pretty diversified portfolio in and of itself. They are selected based on those positive and negative screens we talked about. Those screens, by the way, are defined on that third page. The negative screens are, and you can get more information by calling up the EOR ticker symbol. If you just Google that, you'll find a whole page thing. It's also in these various documents that we sent you as to links as to how to get to them. So what are we going to be having as of June 1st? We're going to be having our long-term pool, which is the default pool for all of our investments and our funds to date. People can elect to put their fund in the ESG pool if they wish. There's some educational documents here that we've included as part of the committee meeting today. There's a one-page document. It's a very brief document that talks about what these pools are all about, but only in a general sense, and it does give you a link on each one of them to go see more about it. There is the 3-page detail document as well that gives you a little more information, and then you can always go to the various prospectus and detailed information on the websites there. So let's talk about when we launch this and how we launch this. So first off, I want to be very clear about what this is. This is an election that a fund can make. It is not an election that a donor or on a per donation basis or any other basis can make. It is the fund that decides that they wish to keep their cumulative funds in that particular investment strategy. I want to also be very clear that it's going to be different than our long-term pool. I have no idea if it's going to be better or worse, but it is going to be different. I can predict that with 100% certainty. And a fund can elect to participate in this pool if it wishes. If it does nothing, it'll still reside in the long-term pool that they've all stayed in for the longest time. When is it going to happen? We're going to offer this on June 1st. Every fund holder will have a 60-day window to elect that option if they wish to put their funds into that ESG pool rather than the long-term pool. We'll do that every year. On June 1st, we'll do it, and we'll give somebody a 60-day window to make that election, and you can choose that at that point in time. These are not designed to flip back and forth between each pool, so that's why we're restricting it to an annual window of time. And how are we going to do that, or how are we going to elect it? There is an investment pool change form that has to be signed by the fund advisor, acknowledging the fact that A, it's going to be different, B, I'm electing to put my funds into that particular fund, or pool, and that we have a record of that election or selection. Affiliate funds have an additional responsibility because they're managed by advisory boards. So what we're going to ask is that if an affiliate wishes to place any of their funds in the ESG pool, that they have an official board meeting and a resolution to back up that signature from the fund advisor. We don't want one person on the board making that election without the whole board being advised that that's appropriate. We're also requiring that of agency funds here as well, so don't think that you're being picked on by because you're an affiliate. The real reason is that they're managed by boards, and we want to make sure that the board is electing them. So that's all I had in terms of the presentation. I am happy to stop there and talk about it in terms of questions and answers, or try to make something more clear that was less clear.
Anyone have any questions for Kevin? Thanks for the presentation, Kevin.
This is Michelle Hahn. I do have a question, and Kevin, thank you for the presentation. I may have missed the answer to this, but can an affiliate, say for instance, keep 50% in the original pool and move 50% to the ESG pool, or does it have to be 100%?
It's an all or nothing selection for that particular fund. So either it wants to be in the long-term pool or the ESG pool, but not some mixture there.
And the reason for that is just we are adopting a new theme of simplicity. We can't let all 2,000 of our fund holders start splitting at different percentages, or Kevin will blow Kevin's world and his mind, and we'd like to not do that.
I see a couple other hands up here.
Cynthia, do you want to go ahead?
So I guess I am a little confused. The affiliates can choose to put all of their funds into one of these pools, or to the new pool?
If they
or
wish.
Is this just for donors, or the donor funds?
So each affiliate has at a minimum, two funds, both the granting endowment and the operating endowment. You can select either of those two to go into the ESG pool if you wish. You do not have to. That is up to each advisory board and what they would like to do with their own monies.
Okay.
We're done. I mean, I think Cynthia, the real truth is we're trying to treat all funds exactly the same. So you are the advisors to your grant making endowment and to your operating endowment. You have the authority as a collective advisory board to make the decision where you would opt the money to be invested.
Okay,
Thank you. Okay, I was confused about that.
all right. Tom, go ahead.
Yes, my question for Kevin is, will the ESG funds still have fossil fuel and mineral holdings?
So the answer depends on the negative screen and whether or not that particular entity qualifies under that screen. I encourage you to go read the detail there. It does not fully exclude any of those two types of entities. It does exclude thermal coal. It does exclude oil sands work, but it does not fully exclude or fully negatively screen out any of the two you just mentioned as a very big category.
And Liz, do you have a question?
Yeah, I don't have a question. I just want to thank the ACF board and staff for making this happen. We have had donors requesting it since 2008. Our board has already officially approved moving our environmental fund into the ESG and an unrestricted grant making fund that we have. So we're really very happy. Thank you.
Well, thank you. And I will thank Chilkat Valley Community Foundation for pushing us into asking very seriously. And I don't know if you've been asking since 2008, but I do know for the 6 years I've been around that you've been thinking about it. So we do appreciate the fact that our affiliates question and make us think a little bit more about what we offer here as a community foundation, not only to ourselves, but to our fund holders as well. This is not just limited to affiliates. This is the first rollout to anybody But this will go out to our fund holders at large as well. So thank you, Chilkat Valley, for doing that.
And I'd say for us, the environmental fund was a no-brainer. The people who founded that fund wanted the socially responsible investments from the beginning, but we also wanted to have a choice for our general donors that they want to choose that way they can go. So I think it's a great thing.
Thanks, Liz. Thanks, Kevin. Margaret, I see you have your hand up.
Me?
Yes.
Margaret from Golden Heart. I missed, where can we find the notes on this presentation so we can share with our other advisory board members?
Hi, Margaret. So we'll have copies of the presentation, including this session, the recording of this session, up on the affiliate resource library.
Okay, thank you.
And I will say there's an election form that goes along with this, and that'll probably be put up there too, right, Margaret?
And, you know, I think we would say that we got guidance from a lot of the large entities in Alaska that do deal in ESG investment funds, that a real clear election form where everybody has to be aligned with which option they choose is really going to help for clarity in the future when advisory board members who made the initial choice in each of your communities may have moved on or transitioned off. And so there will be real clear kind of documentation about what was decided by the board, and that could be changed sometime in the future with a similar form.